The CFPB Director Craniger today testified in the Senate Banking Committee. As you would expect, sparks were flying. This is the Mortgage Banking live stream. Welcome, this is the Mortgage Banking live stream. Today is July 29th, 2020. I'm Troy at Garris Horn, and we are here to educate, we're here to connect, and we are here to entertain. We're going to get into some business developments, we're going to get into some regulatory developments, and we're going to focus a little bit today on the CFPB in particular. A couple other developments I want to chat with you about, but in particular, we're going to talk about the testimony of Director Craniger at the Senate Banking Committee hearing today. Tomorrow, she's going to testify in the House, but we will get into a little bit of the details, figure out where the CFPB is focusing some of its efforts these days, and we're going to talk about where CFPB is getting some of the pressure politically on the Hill today and how that came out in the hearings. If you have questions or you want me to address particular issues, contact me. If you're watching this in YouTube, down in the description below, you'll see my contact information. If you're watching this on one of the other platforms, my phone number is 301-461-8952. My email address, Troy at Garris Horn. At that phone number, you can text me if you prefer, and we can get your issues that you want addressed on this or a future live stream. You can email me the questions or issues that you want to be addressed as well. We welcome all of those, and we try to get everybody who reaches out. We try to get we get the issues or the questions or the comments incorporated into the future live streams, because we think that if you have comments and questions, we think that other people have those too, and it's always helpful. And we try to make this something that, again, is educational and gets you the information that you want and need. Before we get started in earnest today, a couple shouts out. The Texas MBA Mortgage Symposium and Reverse Mortgage Day. I think most people know by now, heavily involved in TMBA. I love that organization. I love the people there. And the TMBA has moved its Reverse Mortgage Day and its Mortgage Symposium to November. It's going to be virtual, as one would expect at this point. And so make sure you reach out to the Texas MBA. Make sure you find out how to get registered. Always great content, always great people, just one of the best organizations in the industry in the United States. There are a bunch of others, and lots of those organizations are good as well. This Texas MBA just has a special place in my heart, and I invite you to check those guys out if you don't already. I know a lot of the people here already do, and we appreciate that. A couple of special thanks. Greg Chafin at First Funding. Haven't seen you in a while, Greg. Thank you for the support. Chad Gamal, same thing. ArchMI. Chad is a fantastic person, fantastic company. Steve Bilta at Citibank Mortgage. Also, I just feel blessed because we have such great people in this industry. And thank you guys for the support. Business update. Housing is still strong. We see some cyclical sort of information and data that's coming out. It's the kind of thing that you would expect, but housing, one of the reasons that I love being in this industry is because housing, to me, is where it starts. Housing, of course, you need shelter, right? But also one of the places where families can build lives together, families can build wealth together. And I think that the housing market, in particular at this moment, really sustaining much of the economic market, much of the economy as a whole, frequently does. It employs so many people directly and indirectly, but also if you come from humble circumstances to begin with, you have the ability to build wealth by having a home. You have the ability to create a wholesome environment for your family by having a home. And this is true, and I think everybody believes this, regardless of where their political views lie. It always, I think, it comes to the point where people may have different views on how to do this, but homes are where it begins, and we are fortunate that we have a relatively strong housing market at the moment. Mortgage applications, MBA reports, are down slightly, but they have been up remarkably for many weeks in a row, and so down just a little bit, 0.8% from the week prior, but nevertheless, the rates are continue to be low, and so the applications, while it's the common cyclical type of data, but they are still, as an overall matter, up, and people reporting that mortgage companies reporting, home builders reporting, realtors reporting that the market remains strong. Loans and forbearance, also, this is another good data point, is loans and forbearance down for the 6th straight week. That number had climbed substantially, of course, right in the beginning when the pandemic first began. But loans and forbearance, MBA reports, now down to 7.74% of the loans that are being held in portfolio. And that number, it continues to, while slowly trickle down, it continues to get to be a better and better number. Pending home sales, a report coming out of NAR, pending home sales up 16.6% in June. This is another good data point and shows that these are pending home sales, the resale market, right? Those numbers are up, and that's another good data point. So overall, the housing market remains strong. The mortgage market, the mortgage industry remains strong. And while there are uncertainties, there's certainly some potential choppy waters ahead we'll have to navigate through. But this industry is for the moment very strong and doing very well. And so we are pleased to have that information out there. And if you need any of the data points here, just let me know and I can send this stuff to you. But these are data points that are coming out of the MBA, the National Mortgage Bankers Association. You can find the data there yourselves as well, or you can just shoot me an email or text or whatever, and I'll send it over to you. And same thing with NAR, same thing with National Association of Home Builders. You can find great information, and these are great resources that these organizations, these trade associations put out, and I support all of them. My law firm supports all of them. And we think that people should get involved with each of those. A couple more things, from our friends that are supporting us on this live stream here. Dennis Lanav at Cisco, thank you, buddy. I haven't seen you in a little while. The pandemic has shut down our brunches, and hopefully we'll get back involved there very soon. Hopefully we can get through this and be able to see each other in person again soon. Roxanne Wood at Vantage Point Title, Alan Staines, great people. Thank you for your support. Let's talk about the CFPB. So today, Director Kraninger is testifying at the Senate Banking Committee hearing. She is reporting, the question on the table for her was, what steps is the CFPB taking in connection in the context of COVID-19, the current marketplace? And, this comes as, the CFPB was created, it legally was signed into law just over 10 years ago now. And it's hard to believe that it's 10 years has gone by, right? But the Senate brought Director Kraninger in today to testify before the Senate Banking Committee. She was the only person that was slated to testify. And I will tell you, I watched the hearings this morning, and the Democrats were criticizing her pretty heavily. She's facing a lot of pressure. They criticized her on a lot of different angles, but in particular, with regards to issues related to the mortgage industry, criticized on fair lending issues very heavily. There were hints that the rulemaking process that she'd been engaged in was corrupt. There were some allegations there that the rulemaking process itself had been tainted. Senator Warren, of course, people know that Senator Warren was one of the principal architects of the CFPB, and she was very harsh she indicated that Director Kraninger had and the Director Mulvaney prior also effectively had, especially in the context of the coronavirus, had not run the agency well. And she said that the recent issuances by the CFPB had given mortgage servicers a get out of jail free card, so long as the mortgage servicer asked or said that they were acting in good faith, that there would be no actions against the servicers. In her words, there's no cop on the beat. And Senator Warren even mentioned that in passing that Director Kraninger should resign. Again, very harsh words. It's an election year. It's not atypical of what one might see in an election year, but nevertheless, Director Kraninger, who testifies very well, she knows how to do this. And that's not a question of being Republican or being Democrat. The agency heads tend to be able to deflect questions and not get sucked down rabbit holes like some people who lack the experience in testifying might do. Director Kraninger was holding her own. Love her, hate her, doesn't matter. She was doing well as a witness, and obviously a lot of people unpleased. That's always the case, but nevertheless, she was heavily criticized by by several of the Democratic senators. Director Kraninger also put out a blog post yesterday that said that she was focused on more inclusion and a more inclusive financial system. And this, I think, suggests, and she testified today also, suggests that the CFPB continues to focus on fair lending in the ECOA context, fair lending in the HMDA context. Director Kraninger mentioned that she'd focus heavily on the whistleblowing components, and also in trying to figure out how to provide information and resources for people during the pandemic that would be more inclusive and get information to people that needed it. Tomorrow she's going to testify in the House Financial Services Committee, and so there will be more information that comes out there. Of course, that the House the majority in the House is Democrat, the majority in the Senate is Republican, so you can expect some differences there, not to mention just the different ways that those bodies function. But stay tuned, because there should be some information coming out there as well that could be quite insightful. And for people, we talk to people all the time in various different capacities and different ways, and this is an election year where a lot is at stake, and there's a lot riding on this, and there's a lot of activity, and nobody knows. Coming from DC, I can tell you that nobody knows until you wake up in the morning, unless you just stay up really late at night. Nobody really knows what's going to happen in an election, especially in a national presidential election. So stay tuned there. We will bring information as it comes out and get that information to you. Switch gears for a moment. HUD. As you know, Brian Montgomery was elevated to second in command at HUD, and Dana Wade, who's been acting FHA commissioner for a while, she has been confirmed as FHA commissioner, and so congratulations to Dana. She's been there. She has a lot of experience at HUD, and will be a stabilizing factor, I think. That's a good development. HUD also put out yesterday a mortgagee letter. This is a mortgagee letter that extends some protections and some requirements in connection with the pandemic, COVID-19 pandemic. There's some modification to self-employment income requirements regarding the verification of business operations. There's a modification to some rental income requirements, and there's a modification to some 203K loan provisions that you'll want to take a look at and take into account if you do those types of loans. So new mortgagee letter. Make sure you take a look at that. because it's information that you will need. Also, FDIC, for the people that have been involved in or are involved in the depository institution in connection with mortgage, and in connection with just banking generally, but also it directly affects mortgage. There's a provision called Section 19, loosely referred to as Section 19 of the FDI Act, and this provision, what it does is it's designed to prevent certain types of people, certain people with backgrounds, criminal backgrounds, from being involved in a depository institution, given that the FDIC insures the deposits of those depository institutions. So there's a pretty stern check on people that have certain items in their criminal background. It just prohibits them from working at depository institutions. This frequently becomes a problem when somebody wants to become, in particular, somebody who has something in their background a long time ago, maybe as a teenager, maybe as a very young adult, and years have passed, and now they want to, they've had some infraction, something in their past, and now 20, 30 years later, they're applying for some position like a mortgage loan officer or some other type of position, a mortgage-related position in a bank, and FDIC has a rule that requires them to go through a pretty elaborate and elongated process. Well, there's been a statement of policy out for quite some time. Some changes made relatively recently, the last couple of years, to that statement of policy, and now the idea was to expand what they call a de minimis type of an exception, de minimis types of infractions that would allow people to not have to file the application before they become an employee. And so what the FDIC is doing is now incorporating that statement of policy essentially into its actual regulations. And so that has been released by FDIC, not yet published, but released, and will go into effect 30 days from publication in the Federal Register. So there's some changes there that people may agree with, people may not agree with in terms of policy. Nevertheless, changes that are occurring. And for depository institutions, every once in a while I come across somebody who is not really focused on these types of issues whenever they're trying to hire somebody. And for depository institutions, it's quite serious. The depository institution must comply with this Section 19 rule, and so they want to make sure that they take that into account. This change, this rule change, this incorporation of statement of policy into the FDIC regs will help alleviate some of the stress there, but it needs to still be considered. Again, thank you for all your support. This live stream, I'm having a great time doing it, and we have lots of friends, lots of people that reach out to us. Michael Lee, thank you very much. Just Josh Pitts, thank you. Ken Hughes, so many great people. PJ Harrigan, I can't thank you enough. There's so many people here that are supporting us, and we're hopefully getting you the information you need, getting you the connections you need. So please continue to support us. If you think we're providing good information, just hit the subscribe button. You'll get this right into your feed. Share the link with your friends, and again, send comments, send questions. We'll try to get your information onto the live stream, and we'll try to get your questions answered. And if you want us to address a particular topic or have a particular person on, particular subject that's covered by somebody on, let us know, and we will try our best to get that information there. I'm Troy Garris, and this is the Mortgage Banking Live Stream. Have a fantastic week.